Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ZHEJIANG SHIBAO interim report. ZHEJIANG Shibao Company Limited offers a wide range of automotive steering systems and accessories. Their product list includes electric power steering products, electric power manual recirculating ball steering gear, electro-hydraulic power recirculating ball steering gear, double pinion-assisted electric power steering, rack-assisted electric power steering, and column-assisted electric power steering intelligent steering products. Steer-by-wire steering, lane-keeping aid, rear-wheel steering, fully redundant electric-hydraulic and dual-motor redundant electric power recirculating ball steering gear hydraulic power steering gear products. Dual-circuit hydraulic power recirculating ball steering gear, hydraulic power recirculating ball steering gear, and hydraulic power rack and pinion steering gear manual steering gear products. Manual recirculating ball steering gear, and manual rack and pinion steering gear steering parts. Electric four-way adjustable steering column, intermediate shaft for passenger cars and commercial vehicles, four-way adjustable steering column for commercial vehicles, steering knuckle and cylinder, pitman arm, hub bracket, manual four-way adjustable steering column for passenger cars, and ECU casting products. The company supplies these products to automobile groups. The stock price of ZHEJIANG Shibao has skyrocketed by 111.54% in the past year due to a combination of factors. The company's robust financial performance, particularly its strong revenue growth and net profit increase, has been a significant contributor. Additionally, advancements in cutting-edge automotive steering technologies, such as steer-by-wire, SBW, and rear-wheel steering systems, have driven investor confidence. These technologies are crucial for L3 plus autonomous driving models and high-performance luxury vehicles, indicating substantial market potential. The growth of China's heavy-duty truck market has also played a role in the surge in ZHEJIANG Shibao's stock price. The company's strategic focus on developing and supplying electric power steering, EPS, and SBW systems aligns well with prevailing market trends, which are driven by increased vehicle production, demand for fuel-efficient solutions, and the shift towards electric and autonomous vehicles. Overall, ZHEJIANG Shibao's strong financial performance, technological advancements, and favorable market trends have all contributed to its stock price increase. The primary drivers of revenue growth for the company can be attributed to several key factors. Firstly, operating revenue increased by 35.4%, driven by domestic sales and export sales. Investment gains also saw a significant increase of 604%. Additionally, government grants and recognition of deferred tax assets contributed to revenue growth. Furthermore, the main business revenue increased by 36%, and other business revenue surged by 176%. Revenue from contracts with customers also rose by 36%, while steering system and parts revenue grew by 38%. The company's expansion into new markets, particularly in mainland China, where sales increased by 36.44%, was another significant driver of growth. In contrast, the primary drivers of revenue decline were limited to a few factors. A decrease in provision for inventory obsolescence and an increase in provision for bad debts contributed to the decline. Additionally, Chery Automobile Co., Limited, and Southeast Fujian Motor Corporation Limited saw a decline in their contribution to total operating revenue. Overall, the company's revenue growth was driven by a combination of factors, including increased sales, investment gains, and government grants. However, the drivers of revenue decline were more limited and primarily related to changes in provision for inventory obsolescence and bad debts. Net income experienced significant fluctuations in the given period, with a notable increase of 34.4% from RMB 76,102,722.06 to RMB 102,096,213.77. However, this growth can be attributed to non-recurring gains of RMB 13,051,657.57, which artificially inflated net income. On the other hand, profit margins showed a mixed trend. The operating and net profit margins decreased slightly from 6.51% to 6.48% and 6.76% to 6.71%, respectively. However, the gross profit margin declined more significantly from 18.13% to 16.95%. The improvement in overall profit margins can be attributed to strong technical research and development investment, improved product quality, and cost advantage through the implementation of Toyota Production System. TPS. Nevertheless, government grants being classified as income-related may have artificially inflated net income, while deferred tax assets and liabilities offsetting each other reduced profit margins. The company is indeed generating positive operating cash flow, as evident from the financial summary and confirmed by two separate pages in the report. The net cash flows from operating activities are a significant plus $91,180,969.09, indicating that the company's operations are producing more cash than it needs to fund its daily activities. This is a strong indicator of the company's financial health and ability to sustain itself over time. The company's debt level has undergone significant changes in recent times. Specifically, short-term borrowings and notes payable have seen substantial increases, with a total liability increase of RMB 135.41 billion. Conversely, the company's interest expenses have decreased dramatically, dropping by as much as 84.1%. This stark contrast suggests that while the company has taken on more debt, it is now paying significantly less in interest costs. There were no notable acquisitions or divestitures in this financial period. The company maintained its existing assets and operations without any significant changes through mergers or sales of business units. The company has a history of paying dividends to its shareholders. This is evident from multiple references in the financial summary, including explicit statements on pages 20 and 74, as well as indirect confirmation through notes on capital risk management, page 96, and dividend payment records, page 114. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights several red flags indicating potential issues with inventory buildup and supply chain disruption. A significant increase in cash paid for purchases of goods and services, coupled with a substantial decrease in net cash flows from operating activities, suggests that the company may be struggling to manage its inventory levels. Furthermore, the high book value of inventories at the end of the reporting period raises concerns about the risk of inventory buildup and impairment due to market environment changes or increased competition. Additionally, the provision for inventory obsolescence made for inventories that were not expected to bring benefits through sale or use further underscores these concerns. These indicators suggest that the company may be facing challenges in managing its supply chain effectively, which could have a ripple effect on its overall financial performance and cash flow from operating activities. That concludes the financial summary for ZHEJIANG SHIBAO. Feel free to comment below, and I will be happy to answer them when possible.